Good morning and thanks so much for tuning in. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Like the name suggests, we are here to set you up for everything that you need to know before the start of your day so that you can start on the right note. Let's start with the headlines. Nifty refueled by Nitish's U-turn and the RIL rally, but attention now shifts to the union budget and Fed meet outcome. US markets see sixth straight record close. The Nasdaq gains over 1% as Treasury yields fall. Equities in the Asia-Pacific start off on a positive note. ITC's net profit beats estimates, but revenue growth slows. Bajaj Finance, meanwhile, sees its net profit miss estimates as bad loans rise. Bullish report on Adani Enterprises propels the group stocks higher. Cantor sees an upside of 51%. BSE will focus on getting institutions algo trade back and to set up data center at BSE to facilitate co-location. That's an NDTV Profit exclusive. It's going to be a busy 3 days for global markets. Here in India, of course, we're looking forward to the union budget on Thursday. But in the US, from today to Thursday, you'll have companies with a market value of over $10 trillion posting their results. There's the likes of Microsoft as well as Apple, as well as Meta platforms in that list. There's also the outcome of the Federal Reserve Open Market Committee's meeting on Wednesday. In international markets, just to give you a flavor of what happened overnight, bond yields have come off further in the US with the 10-year Treasury now below the 4.1% mark. And that's because the Treasury reduced its estimate for federal borrowing for the current quarter, and that was unexpected by dealers. The Treasury Department said that it now estimates $760 billion in net borrowing for the January to March quarter, down from the previous prediction of $816 billion that was released in October. US stocks have gained, and you have the Nasdaq, in fact, that gained over 1%. The Dow gained about 0.6%, and the S&P 500 closed about 0.75% higher. In the Asia-Pacific region, you have a positive start for the early risers. All three early risers, in fact, trading positive. But you have the Chinese markets that are under a little bit of pressure. Of course, the property market there has been the talk of the town in the recent past, particularly yesterday on account of the Evergrande update. Shanghai trading with cuts of about 0.5% and Hang Seng down as much as 1.5% as we speak. Now, let's turn attention to the Indian equity markets and what a start it was for the trading week. And in fact, to the new series. Agam is here to take you through the latest cues from the F&O space. Agam, stellar start. If you can, that's the least that you can say about it. What are the latest cues that you're taking from?
Well, a very encouraging start, Alex. A lot of shots being covered. And that, of course, always is a positive. We saw the Nifty move up sharply, largely on account of the oil and gas space. Of course, Reliance Industries and ONGC among the key contributors, the top contributors for that near 2% up move for the underlying. Even as we now start seeing positions being built as far as the index futures go, with a 1.4% added further towards fresh longs. As far as the Bank Nifty is concerned, again, that remains to be in focus. Remember that we've seen a bout of short covering for HDFC Bank as well, because of which we saw a lot of short covering coming through for the Bank Nifty. In fact, now, once again, comfortably above the mark of 45,000. And we see a lot of unwinding, which is again indicated by the decline in open interest as we speak. But what about the options market? Let's take a look at how things are panning out right now. And yesterday, a lot of players did take the opportunity to go ahead and sell the 21,700 calls and puts to a certain extent, of course, taking advantage of the higher premiums that we have seen in the markets of late. But that said, when it comes to your overall open interest change, now just day before, the range that we were playing for was 21,000 on the lower end and 21,500 on the higher end, and that range has naturally shifted higher, and it is now 21,500, which becomes a sort of support And on the higher end, we continue to see 22,000 as the one, with the maximum open interest providing some amount of resistance. Moving on in terms of the Fin Nifty, and that is, of course, going to be in focus today because of the weekly options expiry. We have the 20,500 mark, which will provide the bulk of your resistance on the higher end. And, of course, lower end, we have 20,300 to keep an eye on. Let's move on and talk about stocks then. And that's where we have seen shorts building up in SBI Cards on account of weak earnings coming through. Metropolis and AU Small Finance Bank, this is the same. And longs for Gale and Godrej Properties. And in terms of stocks which saw unwinding in trade, we saw about a short covering across for Petronet LNG, SBI Life, Federal Bank, Kotak Mahindra Bank, as well as Power Grid. But today, Alex, we just may see a little bit of continuation of the trend that we saw yesterday, largely because of that massive up move that we seen in Reliance Industries. It's not every day you see such a large move on that particular company, and there could just be a little bit more following buying coming through today as well.
Absolutely. Apparently, the last time we saw this was COVID-19,
right,
and that was a one-off. Agam, thanks so much for joining in and giving us that perspective. Let's see whether this rally has more legs. We will, of course, be talking about this in more detail on the editor's cut, and that you'll find during India Market Open that starts at 8 a.m. Let's talk about earnings then. And ITC's net profit has increased 11% on a year-on-year basis in the third quarter, and it has beaten analyst expectations, consensus analyst expectations. Let's talk about the fine print, though. Sesha is joining in to give you more perspective on that. Morning, Sesha. What can you tell us about the numbers?
Right, a sharp 30% year-on-year rise in other income and the 30% lower tax expense has led to a significant beat on ITC's profitability, despite a miss on the EBITDA front that was, lower 3% compared to the previous year. Now, revenues grew 1.6% due to lower than expected cigarette volumes and weak paperboard and agri sales. Now, margins too fell about 180 basis points to 36.5%, missing estimates. So, which are the segments that did well? So, if we look at the ITC cigarette business, which is the mainstay business, the cigarette business is seeing consolidation after several quarters of double-digit growth. Cigarette volumes is estimated to have declined 2% on a high base. Premium cigarettes are doing well over mass brands, aiding revenues, which grew 3.6% in Q3. If we look at the FMCG cigarettes, that segment grew 8%. This is despite an industry-wide slowdown in consumer demand, with continued margin expansion of 100 BPS to 11%. Now, the company did highlight that there was high competitive intensity from local and regional players in certain categories. The raw material prices also remained deflationary year-on-year. However, there was a sequential uptick in certain commodities, including wheat flour, and sugar. The hotel business, of course, they recorded a stellar performance despite a high base. The revenues rose 18% and EBIT surged 57%. So the growth was aided by a combination of factors like higher revenue per available room and higher occupancies across properties driven by business travel, leisure, and even events like ICC Cricket World Cup. Now, ITC has also given an important update here that the stock exchanges have given their no objection to the demerger schemes for the hotel business. The agri revenue declined 2.2% as the trade restrictions on wheat and rice impacted the business. Paper segment revenue also declined 9.7% due to lower price Chinese supplies, subdued demand, and a fall in pulp prices. So going forward, agri commodity inflation would be a key monitorable that the company has highlighted. Even despite of that, we'll also be watching if there is any adverse tax,
in the
regulation.
budget. Yeah. In the budget that may come up. Absolutely. Thanks so much, Sesha, for joining in and giving us that perspective. And of course, watch out for volumes and rural demand, as Sesha was just pointing out with regard to the revenue growth for the quarter gone by. Let's talk about NTPC then. It's reported its third quarter numbers as well, and the net profit and revenue, the net profit has risen by about 7% while the revenue has decreased. There was also quite a substantial drop in the margins for the quarter. Anushi is joining in to give you some perspective on that. Anushi, what can you tell us about the fine print?
Right. So if you look at NTPC, a weak quarter for the business with the revenue declining about 4% and the EBITDA seeing a drastic change over here. The EBITDA has declined about 21.5% with its margins falling to 26.5% compared to the 32.4% it had reported last year. This was on account of the cut in the revenue and also higher fuel costs. So all three of these measures are lower than what the market was expecting. While we come to the profits did see about a 7% increase, but do note that this was on the back of last year's lower base due to higher deferrals. So that acted as a 7% increase, which led to the PAT rising above the expectations. While this was on the subdued side of the performance, there are other performance highlights also that the company came out with, in which it has seen its installed capacity rising about 4.2%. While its gross generation was up about 14% due to the higher demand in the festive season. Subsequently, the energy sent out rose about 15%, while the capacity, coal PLF, that is the plant load factors, the capacity utilization increased to 76% compared to 69%. So we have to see if this is going to impact the Q4 in a better sense compared to the weaker Q3. Apart from that, the company also has declared its second interim dividend of rupees 2.25 per share. So this is all on NTPC that we should be watching out for.
All right. Thanks so much, Anushi, for bringing us those details. The stock has been in focus. In fact, it gained over 3% yesterday, and it is up close to 50% over the last 6 months. Let's talk about the telecom space then, and you have Tri-Data to talk about, and seemingly more of the same. Where you have one particular player losing significant ground and the other two gaining. We've got Smriti joining in to tell you about the latest there. Smriti, more of the same, as I was saying?
Yes. Good morning, Alex.
Morning.
You're right. One player continues to lose. However, the loss this time for Vodafone Idea has halved compared to the previous month. So this is October's data. And if you look at the numbers, it lost about 10.73 lakh wireless subscribers in November as compared to 20.4 lakh in the previous month. Now, this loss is kind of broad-based as well. They continue to lose in most of the states. On the other hand, Bharti and Jio continue to gain ground, as you mentioned. Airtel added 17.47 lakh as compared to 3.52 lakh. Now, it looks like last month was kind of an exception for Bharti, where the additions were really low, but it has picked up again this month and is up 5 times compared to the previous month. If we talk about Jio, it added 34.4 lakh subscribers as compared to 31.5. So pretty much the same there, only a 9% uptick, 9 or 10% uptick there. If you look at the combined monthly connections for the month of November, then that was 3.8 times. As I mentioned, last month seemed like an exception for the overall data, and it grew to 31.83 lakh this month, about 3.8 times higher.
Understood. All right. Certainly stocks to track in trade today. Thanks so much for bringing us those details, Priti. We have to slip into a very quick break, but we've got stock-specific information to give you on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. Let's continue to talk about earnings then. There are a slew of companies that have reported their numbers. Mahima is joining in to tell you about some of them. Mahima, let's start with Piramal Enterprises, a significant net loss for the company during the quarter.
Right, Alex, as you rightly mentioned, they suffered a loss of approximately 2,300 crores, but this is because of a one-time provisioning for their AIF investments, and the provision of 3,540 crore of provision for AIF investment was made, and this is why they've recorded a significant loss. However, if you exclude that, their asset under management will be up 6% quarter on quarter and 9% year on year. So it's just the impact of AIF provisioning. Second, we have Heritage Foods, where the profits has surged 96% on the back of very strong dairy demand in this quarter, and the average selling price of milk rose by 4.2% year on year, which is why the revenues of this company has increased significantly. Then we have Jayaprakash Power, where EBITDA has grown significantly on account of lower raw material prices, and net profit and margins have improved on account of higher realizations due to increase in power tariffs. Then we have Venus Pipes, where it recorded the highest ever quarterly revenue, and the volumes of seamless pipes witnessed a growth of more than 100%, and their welded pipes witnessed a volume growth of more than 50%. Also, exports in Q3 FY24 was 35 crores versus that of 1.4 crores in Q3 FY23. So their exports have also significantly increased. So these are some of the stocks to watch out on the back of earnings which came post-market.
All right, thanks so much, Mahima, for bringing us those details. Let's focus on a few more stocks that have sent out business updates. And in fact, there are a few order wins to take into account, and you've seen how stocks have reacted to those in the recent past. Varsha is joining in to give you some of those. Varsha, morning. What do you have on your list today?
Good morning, Alex. So let's start with KEC International, where it has secured order of rupees 1,300 crores. And our order is for transmission and distribution projects and civil and cables orders. If you see, order is for, like I said, the transmission and distribution projects, and also the order intake stands at rupees 13,000 crore. Then we have Punjab National Bank, where it has approved raising of funds of almost 7,500 crores in FY25, and funds can be generated either via QIP or FP or in any other mode, and shareholding of government remains above 52%. Then we have Krishna Diagnostics, where it received contract from the Commissioner of Healthcare Services in Maharashtra to provide MRI scan and CT scan services, and the contract is received in 17 districts. Then we have Somani Ceramics, where it commenced commercial production of its subsidiary company Somani Max Private. Now, company will produce large slab title of 4 million square meters per annum, and the manufacturing facility has a potential to generate almost 250 crores of revenue. Lastly, we have Suntec Realty, where company will develop projects of GDV of 3,000 crores, and project is situated at Nepean Sea and Bandra Bandstand. And if you see, company has doubled its GDV from 12,500 crore to 30,000 crore in FY24.
Got it. Thanks so much, Varsha, for getting us those details. Let's focus in on a stock that has gained quite considerably over the last 1 year, and that's Larsen & Toubro from the large cap space. I was looking at the 1 year chart, and it's up as much as 75%. It was up 3.5% yesterday as well. Now, it's going to be in focus because of its earnings today, and we've got Vikas joining in to tell you what are the key aspects to focus on. Vikas, good morning. Beyond, of course, the headline numbers, what would you be looking for?
Yeah, right, Alex. In this quarter, basically the earnings are likely to be mixed. As far as their revenue and profit is concerned, what the analysts have or the consensus analyst estimates are is that it's likely to go up. But as far as the EBITDA and the margins are concerned, that is likely to see a subdued growth. Now, this growth is likely to be led by better execution capabilities that the company has exhibited in the last couple of quarters, especially after COVID. We see that there has been improvement now going ahead, and also the company expects that there will be recovery as far as the margins are concerned going ahead. The margins are impacted mostly because of legacy projects, low margin projects from COVID period, which the company expects will get exhausted as far as FY25 or calendar year 25 is concerned by then they expect to reach the threshold. As far as execution is concerned, they have been assured by strong order inflows from not just India but also international orders, which in the previous quarter was almost 56% of their total order inflows that they got. So that is contributing, especially from Middle East and Gulf countries. All these these countries are looking at becoming net zero by 2050. They all are doing this massive investments in green transition projects.
Got it. All
the
right.
key monitorables.
No, so go ahead. Go ahead. The key monitorables.
The key monitorables would be the revenue guidance that the company had given as well, and also the inflows, order inflows. So they expect that by Q4 they expect to exceed this revenue guidance. So it will be good to monitor, how it has progressed, and also the monetization of the Hyderabad metro project.
Got it. All right. Thanks so much, Vikas, for breaking those down for us. Order execution, as Vikas was pointing out, a key monitorable for Larsen & Toubro. Of course, its order book continues to grow. Let's talk about the pharma space, and Dr. Reddys Laboratories is one to watch in trade today. It's going to be posting its third quarter numbers. And we've got Monal with this report about the key elements to watch for.
Well, yes, after Cipla came out with its results last week, the stock has been seeing pressure. Now, what's going to happen to the big names that are coming out with their results this week is to be seen. For now, we have Dr. Reddys that's coming out with its results, and the expectations, let's peg them versus the Bloomberg consensus. So the Bloomberg consensus says that the PAT is expected to be up around 6% versus the same quarter last year at around 1,300 odd crore rupees. Revenue up 3%, EBITDA up 2%, and the margins are expected to come in slightly lower at 28.4 versus a 28.7 in the same quarter last year. Now, what are the key things that are to be watched out for in the commentary that could make or break the stock reaction post the earnings? Well, the first is the US revenue growth. The company has been talking about certain price erosion stability that it's been witnessing in Q2. So we need to see whether that's even bettered further, then that would be a positive. Also, there's an element of Revlimid. So the base business growth is something that needs to be watched out for. Then we have the update on the first ever biosimilar that Dr. Reddys wishes to launch, which is Rituximab. And for that, its Bachupalli facility underwent an inspection with 9 observations. Now, the company is yet to tell us whether it's obtained any clearance or when can we expect a re-inspection and what's happening on that facility, which would give some clarity on the launch timelines. Other than that, the India business is another key monitorable because the company had spoken of a weak acute season in Q2, which is usually the case. So now the expected run-up is expected in like Q3. So we need to see whether that's played out the way the company has expected it to. Apart from that, margin guidance is something that we need to look out for, whether the company is maintaining its margin guidance at 25%, and what exactly is the new launch pipeline in the US for the company. Now, we need to understand here that for the past couple of quarters, analysts have been raising concerns that Dr. Reddys does not have any big launch in the US, and this could potentially harm its revenues in the next 2 to 3 years because the growth prospects seem numbed. But now, if the company were to announce any key product launch, then that would be a positive for the company.
All right, turning away from earnings, if you're a trader in the Indian equity markets, then you've probably seen headlines over the course of the last year or so, in fact, possibly even beyond that, that they are contemplating an extension of the time that you can trade futures and options. Well, there was an update on that at a press conference just yesterday at the NSE. SEBI chairperson Madhabi Puri Butch has spoke about the status check on that proposal. Listen in to what she had to say.
There are very divergent views and diverse views right now, even amongst the broking community. And of course, we have not yet reached the stage of asking the investors themselves what they want. So that's a different level of consultation and feedback that would be required. But at the moment, my understanding is that the broking community itself is divided. It's a divided house. And there is a lot of discussion and deliberation going on. And that, they would be reaching some conclusion one way or another, in some reasonable timeline. But according to us, that is, the first stage. That what do the MIIs think is the first stage? What do the brokers think is the second stage? What do the investors think is the third stage? And we would need to take all of that into consideration.
Right, and why don't you let us know what you think? Why don't you send us a message on any one of our social media platforms to tell us whether you would want an extended trading session. That brings us to the end of this particular edition of All You Need to Know, but up next is India Market Open, and you would want to watch that before the start of trade. Do stay tuned. This is NDTV Profit.